All right, let's bring in Kevin Green, senior markets correspondent, to help set up the action today. KG, happy Friday. Let's talk about kind of the latest with regard to the U.S. and China in particular. That's the one that investors have really been watching all week. Traders trying to get a sense of where things are. Are we in talks? Are we not in talks? Where do things stand from what you've been watching?
Yeah, there seems to be a little bit of bifurcation here when you're kind of looking at the conversation coming out of China as well as the Trump administration. Now, Donald Trump did have an interview with Time magazine here and made a couple of comments stating that President Xi actually has contacted him, as well as conversations are actually ongoing when it comes to China. But he also believes that it would be a win if a year from now we still actually have tariffs in place. Now, there was a mention of around tariffs as high as 50%, but I don't think that's going to be the baseline number there. But that is another reason probably we are seeing a little bit of pressure when it comes to the equity markets. But once again, we're kind of getting two different reports from these two countries here. And I don't think the market after a while probably is going to focus on who's talking to who. It's just, is a deal going to get done or not? And I think that's going to be the base case here. Now, when you're kind of looking at China, there is some reports that they are going to be exempting a couple of items from their 125% tariffs that they have on the United States here, which includes certain pharmaceutical drugs, as well as aerospace equipment, as well as maybe up to 131 other product categories that could be impacted here. So that's actually a pretty decent sign that is going to be confirmed. But overall, once again, we're kind of hearing this back and forth, but I think the market now is really just trying to focus on, is a deal going to be done? And it does appear that we might hear some trade deals happening over the next 3 to 4 weeks, according to Scott Besson. So that'll be also very interesting to see if that hits the wire and how the market reacts to that.
Yeah, I've seen some reports of a potential deal coming closer with some other parties outside of China. But let's talk a little bit about how markets are pricing things. Given the softness that we're seeing in futures right now and the gains that we've seen in the past few days, does it seem like the market is pricing in, especially given this most recent commentary of a potential 50% tariffs a year from now, given what President Trump said at the time?
Well, obviously we've had around a 6% move to the upside over the last three trading sessions, which is actually fairly aggressive here. So it would not be surprising if we actually see maybe a little bit of a stalling, consolidation, or even a pullback to kind of recheck some of these the potential support levels that we have to the downside here. If you're asking, is the market really kind of pricing in that everything is rainbows and sunshines, I would say no. If you kind of look at the VIX futures curve, it's still in a backwardation formation, pretty much going out for the remainder of this year. That just means that the market is still pricing in uncertainty in the near term compared to the long term. Now, because of that, premiums are still high when it comes to the options market, but we are seeing more realized vol or actual moves in the S&P 500 than what is actually being implied. So this is kind of a trader's market if you are on the right side of that trade, and that's actually a benefit for a lot of those viewers that actually do watch this show here. You did see a little bit more of a risk on tone when it came to technology stocks. There was also another report that maybe we see some form of exemptions when it comes to the semiconductor companies out there. That's why we saw a little bit of a bid in the stocks yesterday, which was over around 5% to close yesterday. And so, and we also had Google earnings, which we'll talk about here in a second. So we did see a little bit more of a risk on tone, a broadening out of this rally, but yet we're just getting to key areas of resistance here to the upside, sitting at around 5,500. So the bulls are definitely trying to get into control right now. They have been able to overcome that 20-day moving average. Now it's all about trying to sustain that, Diane. Are we able to actually hold these gains and continue to push higher, or do we see once again another pullback in this market? And I think it's anybody's guess to see to know exactly what's going to happen next year.
Okay, so that I think begets the next question then. What are you looking for in terms of levels, especially if you see more bullish momentum to the upside for the S&P 500, finishing at, 5484 yesterday? So where do we go from here potentially?
Yeah, well, if we see a continuation of bullish trends, I think that's going to be the very key thing here. Once again, we're hitting an area of potential resistance in the market, so we have to be mindful of that. But if you're looking to the upside here, looking at around 5,600 for today, even though there is going to be some walls here to try to get us to that 5,600. So we're going to probably need to have news in order to push us higher here. To the downside, looking at 5,385. The reason why I put that cautionary note there, the last 30 minutes of the trading day yesterday, you did see actually a lot of active of put flows getting put back into the market here, where individuals were buying SPX out of the money puts, as well as SPY out of the money puts. And then if you're looking at the sector basis, you saw some puts being put on an NVIDIA, as well as the healthcare sector and things of that nature here. So once again, I think there's still some hedging positioning taking place here. There's still not an all clear signal. The trajectory is to the upside, obviously over the last 3 days here, but we just have to be able to sustain and continue to push through. And we'll see if that's going to be able to happen here today. What I will say, liquidity is getting better. It's improving. That's a good sign for the bulls. And then also, if you're looking at market breadth, once again, the participation is something that you really don't see in a weakening or a pullback type of market, but anything is once again possible. So we have to just continue to keep our head on a swivel here and try to take profits as soon as you feel it's appropriate here, and maybe not let things ride too much to the upside or even to the downside right now.
Okay, I know. Well, I know when you say let things ride too much to the upside, people love the upside more than they love the downside, obviously. Let's talk a little bit about Alphabet's earnings. Better than expected results here. What stands out to you in terms of their numbers?
Yeah, we are seeing a decent little pop to the upside here. They did exceed the street's expectations when it came to both top line and bottom line numbers here. The revenue came in at $90.23 billion. Street was looking for $89.12 billion, give or take a couple of pennies there. The adjusted earnings per share, when you're kind of looking at it, or the GAAP earnings per share, came in at $2.81. Street was looking for $2.01 on the adjusted basis. And if you actually exclude the gains, as they had around an $8 billion material gain on non-marketable securities that really did push up that EPS. If you actually exclude that, they still exceeded the street's expectations, with EPS coming in at $2.27 here. What is actually very interesting, even though we did see a beat on the top and bottom line here, when you're looking at YouTube ads, that actually came in lower than the street's expectations slightly, coming in at $8.93 billion. Google Cloud also missed slightly, coming in at $2.26 billion, but there were very small misses there. And when you're looking at the cloud operating margins, those actually did expand at a healthy rate here. Now they're sitting at around 17.8%. So overall, you didn't see anything that was negative when it came to the executive commentary. They did actually increase their stock buyback. Now they by $70 billion. You are also seeing an increase when it comes to the dividend. They increased their dividend by 5% here. So there's a lot of good things or good signs that we saw from Google. And they also reaffirmed their CapEx spend as well. So that was something that the street was looking forward to. So nice little pop. Executives held it together here, and let's see if they're going to be able to continue this rally to the upside when it comes to this night.
Yeah, and I didn't see any mention of uncertainty, which has obviously with some other earnings announcements impacted them. And look, I think total ad revenue looked good. I know you mentioned the softness in YouTube, but total ad revenue looked good. Any other points that you wanted to highlight from their earnings, KG?
Yeah, exactly. So, YouTube came in a little bit light, cloud came in a little bit light, but search revenue actually did exceed the street's expectations, and that's really their bread and butter. So everything's looking really decent right now. It doesn't appear that they're losing market share yet to some of these AI platforms like OpenAI or Grok or anything of that nature yet. But once again, this is a stock that actually is trading relatively cheap compared to some of the other Mag 7s. It trades at around 17.5, maybe 17.75 forward multiple here. So probably a little bit more of a lower bar. Obviously, the street's a little bit skittish here, but they were able to exceed here. And you want to see that type of follow through with the other Mag 7 names in order to hold us up when it comes to these EPS estimates for the quarter, because we are seeing some companies really pushing, pulling guidance and revising their EPS guides to the downside here. And that's going to also impact multiples. So you need the majors to really hold up here.
All right, certainly, at least Alphabet, Google doing its part so far. Thank you, KG.